Ladies and gentlemen, welcome to Whitburn Accountants and Advisors China webinar series on human resource compliance in China. You've joined us for part 3 of this workshop series on how to calculate your personal income tax liability in China. Can you hire in China without a legal presence? What are the critical labor and employment law questions for us to know? Is it difficult to terminate employees in China? How can you prevent fraud occurring amongst all your employees? These were questions that were raised during our day 1 or part 1 webinar series on Monday. If you weren't able to join that, don't hesitate to look at our YouTube channel where the recording is already posted. Yesterday, we talked about visa requirements for foreigners, what types of visas exist, how you can determine what visa might suit you based on your circumstances, and what is currently happening around the coronavirus as well. So again, if you're interested in looking at that, the recording is not up yet, as I had a couple of technical difficulties yesterday to upload it, but it should be uploaded today. Today, we're going to be talking with individual income tax regulations. The reform was implemented as of Jan 1, 2019, so it's been 1 year since its passing. And we're going to be taking a look at how things have developed, what it means, etc. And we're also going to be looking at the current policies in place during the coronavirus in relation to income tax. The purpose of doing these webinar series is really to provide attendees as well as registrants with an overview of what they need to know going into the Chinese market as well as being in the Chinese market. So we do hope that these webinar series educate you on what you need to know and build up your knowledge level on what you need to know to become successful in the market. So today we're going to be talking about, well, you've joined us for part 3, and we're going to be talking about how to calculate your personal income tax liability in China. So just to start off, because there are a couple of new names that have joined today, a little bit about who this webinar is for. Ultimately, this webinar is for newbies to China, so foreigners or newly graduated individuals who are looking to basically start their careers, or foreigners who are acting as entrepreneurs and are looking to set up their businesses. And they're in that startup phase where they're educating themselves, perhaps doing a bit of research or getting their business plan in order. And they just want to be educated and learn as much as they can on what they need to know to protect themselves in the market. The next category of individuals or companies are startups in China. These are usually companies that have been incorporated for a period of 1 to 3 years, where the owners or the general managers have been so focused on the core business, predominantly sales, I would presume, that they have neglected other areas where they should have probably paid attention, such as finance, employment issues, any form of administrative compliance. So they're coming along basically to listen in and hear what they need to know. Experienced China hands, I always get people who are surprised, but I do have people on the webinars who are experienced China hands who have been in China for a long period of time and just want to get updated on what the newest regulations and laws are, because as we all know, this changes frequently in China, and obviously tips, ideas on how they can do things better and how they can operate better in China. So I would love it if you haven't already in this webinar series and you've just joined today, please let me know who you are. Are you a newbie? Are you a startup? Are you an experienced China hand? It always gives me a better understanding of who my audience is. So you can easily type into the chat section of the control panel, just message me newbie, startup, experienced, and that will let me know a little bit about you. How this webinar works. Well, first of all, let's talk a little bit about the system. You are on the GoToWebinar platform. If you are based in a sensitive jurisdiction like China or the Middle East, you may find that the quality or sound system can go in and out. You can go to the audio section of your control panel and you have the option of choosing between landline or computer audio. Computer audio is the default function. If you want to switch to landline, a series of phone numbers will be provided to you where you can then log in through a landline and have a better connection, and as well as a better sound system. You have all been muted, obviously, to avoid distractions and background noise as I'm presenting. This is 60 minutes of your time, so please use it to your advantage, all right? So grab yourselves a pen and paper to take notes. You may want to switch off your mobile so you can concentrate a little bit better, and ideally interact with me, all right? This is a complimentary webinar session, so add questions, add your comments into the chat section or the question section of the control panel. But the best way to take advantage of these webinars is if you do interact with me. The best part usually of the webinar is the Q&A at the end. But if there are no questions, then there will be no Q&A. So do interact with me. Now, I tend to teach and educate, so there is going to be a lot of information and detail in today's session. I do tend to talk fast, so if you missed out on something, again, message in the chat box and I will reiterate it during the Q&A. Again, use this to your advantage. Now, what are we covering today? Today, we will be talking about just general tax cuts that were imposed in 2019 to give you a much bigger overview of what the government is doing. I'll be talking to you about individual income tax and also the current tax policies under the coronavirus. Now, why am I able to help you? Well, the picture is purely to put a face to the voice, because using a camera system always puts the quality a bit lower, although I might start doing that in March's webinar series. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I've been in the China corporate services and compliance sector since the last 16 years. Arrived in Shanghai at the end of 2003. I've worked with over 500 international companies and entrepreneurs and startups with their market entry strategy, their implementation, and their growth in China. That just leads me on to the fact that I'm a creator of the China Roadmap program, which is a program designated to entrepreneurs, companies that are looking to get China ready and want to be able to tick off all of the bullet points that they have to think about when going into the Chinese market. And this program is not just for people that want to implement a structure in China, it's also for those that are looking to transact with China. So it's the whole array. Now, if you enjoy this webinar series, and if you want to be bombarded with emails of Chinese information, we have a free e-newsletter that goes out every Monday, Wednesday, and Friday, usually about old publications, old webinars, upcoming events, upcoming webinars. And if you're interested in subscribing, you can do so on our website, woodburnglobal.com. Just enter your email address and you'll be subscribed. Otherwise, you can follow me on LinkedIn, follow the company on LinkedIn, or subscribe to our YouTube channel, where all of the webinar recordings are posted up there. So you can also review the archived webinars as well. So let's begin with today's presentation. So I kind of want to start off with, why should you be concerned by income tax in China? Well, the first is always, you want to be able to save taxes. I mean, that's everyone's ultimate goal, is actually to save on their taxes. But what we need to make sure of is that we do not evade taxes, but rather that we optimize our personal tax structures. Now, if you are a foreigner and you have been seconded to China, then most likely you will have a dual salary, and most likely you will have a tax liability in more than just one jurisdiction. So the goal is to make sure that you are optimizing your tax structure so that no tax bureau can approach you and say that you are evading taxes, okay? And the whole purpose regarding today's presentation is so that whether you are a foreigner or whether you are a Chinese person, you have an overview of what is required for filings, how taxes are calculated, what deductions are available, what constitutes a resident in China, and overall what you can do now also under the coronavirus. So let me reflect a little bit on what happened in Jan 1, 2019, because it gives you a bit of an overview and understanding of how tax rates have dropped and how this has become very beneficial, not just for companies, but also individuals. So in about 2018 or so, end of 2018, beginning early 2019, China announced a tax cut of 200 billion RMB for small, medium-sized enterprise in order to stabilize the economy and boost employment. And this measure was the first in a series of tax cuts and stimulatory measures for 2019. And according to Chinese Premier Li Keqiang, various tax cuts and exemptions will only be implemented for small, medium-sized enterprises for a period of 3 years, starting from Jan 1, 2019, all the way to December 31, 2021. Now, ultimately, what these tax cuts mean from a company perspective is that small, medium-sized companies will be able to reduce their tax burdens by about 5% from 10%. And I have a table on the next slide that will actually highlight that. So basically, it's a great initiative that the Chinese government has done. It's a great tax relief for small, medium-sized companies as well. So what does that actually mean? It means that companies that have reached an annual taxable income of 1 million RMB will have now an enterprise income tax rate of 5%. Previously, it was at 10%. Between 1 and 3 million as annual taxable income, you will have a rate of 5% on the first million and a rate of 10% on the next 2 million RMB, whereas previously you were automatically taxed at the 25% tax rate. When you go above 3 million RMB as the annual taxable income, you are going to be liable for the full 25% tax rate. But initially, for everything that's under 3 million RMB, what an advantage. So it's an amazing, amazing benefit that has been provided to small, medium-sized companies. Now, in addition to the profits tax cuts, there is also cuts in relation to the value-added tax. So when you issue fapiaos in China, you can be designated as a small-scale taxpayer, or you can be designated as a general VAT taxpayer. Now, under the general VAT taxpayer, there have been no changes. It's only been applicable to small-scale taxpayers. So previously, what happened was that you would apply a 3% VAT rate if your monthly, if you issued invoices, fapiaos, amounting to 30,000 RMB per month, or quarterly fapiao amounts of up to 90,000 RMB. Now, this has now changed, where the monthly has gone up to 100,000 from 30,000, and the quarterly has gone up from 100,000 to 300,000. So again, huge benefits for VAT individuals. The central government will also empower local authorities to reduce other forms of taxes, whether it be resource tax, stamp duty, local education surcharges, land taxes, urban land use taxes, etc. Nothing has come into fruition as of now. There will be annual meetings that come up, well, not currently, but there will be meetings that pop up later on in 2020 in reference to that. Now, looking at the individual income tax. Okay, on August 31st, 2018, a second draft of the individual income tax law was passed. And the new law makes changes to many elements of the calculation and enforcement of the IIIT in China, focusing on expanding deductibles, adjusting tax brackets, and changing the definition of residency rules. The new tax brackets and the standard deduction amounts were taken into effect October 1, 2018. So if you were not aware of that, you may want to look at your financials from 2018 and see if you need to recalculate those. And the remainder of the tax laws were implemented Jan 1, 2019. So what have been the main changes? The main changes have been on thresholds, but probably the biggest change, and yet not biggest change in reality, has been on the taxable income being calculated on an annual basis versus a monthly basis. Now, in reality, what has actually happened is that individual income tax has still been required to be paid and declared on a monthly basis, but set aside by the tax bureau themselves. And now they are handling the annual calculations to understand whether the correct amount has been paid or whether additional amounts have to be paid. So this leads on to whether the annual individual income tax filing has to occur or not, and I'll go into that later on in a later slide. The annual income includes salaries, wages, labor income, authors' remunerations, royalty income, etc. So what is being set aside currently on a monthly basis is just the base salary. But if you are earning any additional earning in any other additional channels, then you have to announce that to the tax bureaus and make that declaration. Previously, there was an automatic deduction from the gross salary. Now that has been increased to 5,000 renminbi for everyone. So it is for both Chinese as well as foreigners that this is applicable. So previously, for locals, it was 3,500. For foreigners, it was 4,800, and now it's unified at a 5,000 renminbi automatic deduction. So I put here two slides. The first slide is looking at the tax brackets on an annual income perspective. So, you've got to look at your annual income and make your own understanding of this table. However, quite frankly, because your base salaries are being, the income tax on your base salaries is being deducted on a monthly basis, I still have put inside the tax brackets for the monthly income to ease everybody's pain, because even for us, this is how we are making calculations on a monthly basis ourselves. Now, as we are hitting the end of February, we will be looking and utilizing the annual income table to look at, not only the base salary, but also any other channels of income that have been received to analyze whether there's been too much or too little paid. But for your benefit, I've included both tables to improve the understanding of how the calculations are made. Now, with the new regulations, it's important to know who has or who does this affect. So the adjustments of the tax brackets will mainly lead to a tax relief of individuals with low and medium income, since the range of the 3%, 10%, and 20%, I'll put it here for your reference, tax brackets has been expanded, while the 25% has been narrowed, as you can see on the table as well. And the tax brackets for 30, 35, and 45% remain the same as before. So there are no changes in those categories. And again, it's just a matter of understanding that, you've got to make your calculation from a monthly to an annual, although in reality, it's not like that. So special deductions are still being offered to individuals. So if you look at the black items, education expenses for children and housing rent, that was always there. That was always available as a deduction for anybody's salary package. But now in the red, you have the additional deductions that are being offered, which is support for the elderly, expenses for further self-education, healthcare costs, housing loans, and individuals that are making donations. So this comes into fruition right now. We have finalized the 2019 fiscal year or calendar year for income tax for 2019. If you have paid for any of these items and your company is allowing that these items become a deduction in your base salaries, then you need to put your hand up now, mention it, and provide all of the supporting documentation to prove it, so that it can then be calculated under the annual individual income tax declarations. So this is something that should be a to-do for you if you are doing it right now. Now, there were other types of tax exemption benefits, such as meals, relocation costs, family visits, language training, that were also provided to foreigners in particular, besides just the housing and the children education expenses. Now, these costs, as far as we are concerned, are still being deducted in 2019 with no contradiction from the tax bureaus. So I would love to hear, for any of you that are attending today, if you've had a contradiction to what I've just said. Add it into the chat or the question section portion of the control panel. Would love to know whether you have had feedback from your companies or feedback from the tax bureaus where meals, laundry, relocation, or family visits and language training have not been deductible. Like I mentioned, for us, it still has. We're still recommending individuals or companies to allow for these deductions, and we've had no issues with the tax bureaus anywhere where we have clients so far. So that's Northern China, Beijing, Tianjin, Shanghai, Wuxi, Nanjing, Guangzhou, Shenzhen, Zhongshan, no issues so far. So love to hear your feedback if you have had any problems. Now let's move on to what is considered as a tax resident. And obviously this applies a little bit more to foreigners. So foreigners can be obviously foreigners with a foreign passport, or even Chinese that have now foreign passports as well, where the definition has been updated in regards to what a tax resident means. So the revised law recognizes now two types of taxpayers, namely the resident individuals and the non-resident individuals. The length of residence used to distinguish between the two groups is adjusted to 183 days from the previous one full year, and the tax year runs from 1st of January until the 31st of December. So if in 2019 you have been in China for more than 183 days and you have the entry and exit stamps to prove it, then you are considered a resident individual, which means you are subject to individual income tax on your salary in China, regardless of where that salary is paid. So please do keep that in mind. In addition, for resident individuals, the individual income tax on comprehensive income will be calculated annually based on the total comprehensive income earned during the tax year, minus any of the applicable deductions that are provided by the company. And if the comprehensive income has tax withholding agents, the tax would be withheld monthly by the agent. However, if you are just now calculating that you've actually been in China over 183 days, you should announce yourself to your company and say, what options do you have? What will the company be responsible for? Because the last thing that you want to do is get into trouble and get caught at the immigration, where the immigration computer systems and software systems are now connected, at least in Shanghai, to the tax software systems. So make sure as a foreigner and as an individual, you are making those calculations yourself, because I can honestly tell you that companies don't keep track of that. Now, for those of you that are actually residing in China, there is always the question of the 5-year residency rule. Does this still exist for foreigners? The residency rule does still exist in China. However, it has now changed. So how has it changed? Well, under the old policy, if a foreigner stayed in China for 5 consecutive years, his or her worldwide income would be taxed in China. And now, under this new IIIT reform, the 5 years have been upgraded to 6 years, allowing foreign workers in China more time to avoid paying taxes on income sourced overseas. In relation to the 6-year rule, if there is a single departure outside of mainland China of more than 30 consecutive days at any point during the 6 years, the clock to count tax residency will be reset. This is different from before, where you had an option of 30 consecutive days or 90 days in total in a calendar year. Now the rule is very simply 30 consecutive days. Since the start of 2019, a foreigner is deemed to have spent a year in China if he or she stays in the country for at least 183 days within a given calendar year. Those who stay in China for less than 24 hours within a single day will not be counted as having a day of residence, meaning if they arrive in the morning and leave in the evening, then they're fine. The number of years of residence to calculate the 6-year rule will be determined beginning from January 1, 2019. So this is very critical. Basically, Jan 1, 2019, everything was reset for all foreigners. And it's basically the number of years spent in China before 2019 will not be included, only the days thereafter. So now regarding the annual individual income tax declaration, is it still required in 2020? So previously, the regulation was that if you had an income, an annual income of over 120,000 RMB, by March 31st, you had to file an annual income tax return, which highlighted basically your base salary, which was over 120,000 RMB on an annual amount. And you also had to declare any other income from other channels. Now it's a little bit different. So the issue is that you are still paying your taxes on a monthly basis. You now need to do a reflection and look at all other channels that you've been receiving revenue or income from. You need to analyze whether that is applicable to individual income tax. If you have not been doing monthly declarations on that, now is the time that you have to make that declaration. In reference, if you are not earning any other income outside of your base salary, then in terms of the annual individual income tax declaration, if you have looked at the annual taxable income table and you see that there is a variance which is over 400 RMB, then you still need to do the annual individual income tax declaration. If the variance is under 400 RMB, then you don't have to do the annual individual income tax declaration. So basically, let me reiterate what that means, because maybe it sounds a bit complicated. In 2019, every month you have been declaring your salary, and it has actually been set aside by the tax bureau, okay? Now it's February, you're going to be looking, utilizing the annual table that is within this presentation. You're going to be looking at your annual income that you actually received, and you're going to make the calculation to understand whether the amount that has been set aside is the correct amount or whether there is any form of variance. If there is a variance where actually you have to pay more and that variance is over 400 RMB, then you need to do the annual individual income tax declaration. If there is a variance and it's under 400 RMB, then you don't have to do the annual individual income tax declaration. I hope I was able to clarify that. It is a little bit complicated. I apologize, but that is just now currently how the system works. You do have an extended period for doing this annual individual income tax declaration. You have between March and 30th of June to do it all. Now, one of the things that I do want to highlight in this presentation is the fact that the tax authorities are becoming much more educated on strategies that both companies and individuals have for tax avoidance. So within the new reform, the tax authorities have been provided with additional powers over tax avoidance schemes. They are looking at individuals. They are doing much more comprehensive and in-depth investigations into individuals and their contracts. You know, if you do have a dual contract arrangement, you really need to make sure that there is a true and valid situation behind it. If there isn't, and it is a fake, made up type of dual contract arrangement just to decrease your tax liability in China, be prepared that you might get caught out on it. So these are things that once the coronavirus slowly starts dying down and we get into a period of March to June, that is what the tax officers will be focusing on. So be aware of it. How to calculate your taxes in China. So this is all in written format. I've actually put numbers on the table so you can see how it's calculated. In theory, you should also be looking at the monthly income table to understand what your monthly taxable amount is. So let's say you have a gross salary of 19,000 RMB per month. You get a special deduction of 3,600. You get an additional deduction of 5,000. Now, where does that come from? Let's go back to the table so I can highlight it to you. We're going to look at the monthly income table. So if you are, let me see if I can use a highlighter to show it to you. If you're earning 19,000, you fall under category 4, okay? Which is, oh, sorry, apologies. You fall under category 3. I looked at the wrong table. You fall under category 3. You have a tax rate of 20%. And I made a fault in that calculation. I'm looking, sorry, at the annual income. I should have changed that. So you are going to make your calculation based on 20% and a quick deduction of 1,410. So let's go to the calculation. Basically, what this means is you're going to take 19,000, you're going to do a deduction of 1,410, and you're going to do an additional deduction of 5,000 renminbi. At that point, let me go back and let me eliminate this highlighter. There we go, and let me eliminate all drawing tools. I don't know how to change that. Apologies, I am now a little bit stuck. There we go. So we get back to the table. I have to redo that calculation. But basically, 19,000 minus 1,410 minus 5,000. You then fall under the 20% range. And at that point, you can make your calculation. Then you also have an understanding of what your net salary is. Don't forget to think about social insurance, which is something we'll be highlighting on in tomorrow's presentation. Definitely think about the social insurance component, whether that is split between the employer and the employee, and how that might affect your salary as well. So what was the reason behind the key considerations for the IIT reform? Basically, it was to create a new definition of the individual residency criteria. So now the residency is considered 183 days in a calendar year. It's an adjustment to the IIT categories and having lower tax brackets. It's an increase in the standard deductions. It's an introduction of additional deductions and allowances. It's the combination of an aggregation schedule taxation system. You're definitely looking at anti-tax avoidance rules, so be very aware of that. And you're also looking at calculating on an annual versus monthly basis. So even for 2020, January and, well, February will be coming up in 2 days. You're also looking at a monthly declaration where the money is still set aside. So please be aware of that. So what do you need to do, or what do you need to consider from an operational perspective? Well, taxpayers must collect all domestic as well as overseas income tax payment related documents. You need to have evidence relating to deductions within a time frame. So if you have been doing any donations, if you have had healthcare issues, if you're taking care and supporting your parents in China, then you need to have supporting documentation in order for those to be able to become deductions. In addition to that, you must create, revise, and match internal processes and systems covering, FAPIAO collections, verifications, storage-related work. Just recently, and this was really not to the fault of the foreigner, but he was completely clueless about that. He had received fake FAPIAOs from a third party, and it was the company's internal accountant that had discovered them, because she is checking all FAPIAOs against the online tax bureau website, which you can do, and realized that a lot of the FAPIAOs had been faked, which means that none of those can be booked and none of those can be considered under a deduction for the individual income tax. So whether you're a foreigner, whether you are a local, you want to make sure that when you do the receipt collection, that they are true and valid FAPIAOs. The aim of the government by implementing all of these individual income tax reforms is basically to lower tax liabilities for companies and individuals. And that's basically with the premise that the GDP in China is going down. With the coronavirus, it's going to go down even further. By how much, who knows? There's a lot of speculation right now in the market. In addition to that, China is trying to replicate itself as a global tax system. So it is trying to mimic tax systems from other major jurisdictions and trying to match them. There are very few countries in the world where you have to declare your salary on a monthly basis. In most jurisdictions, it's on an annual basis. So they are slowly trying to get into that type of tax system. What we'll be touching on tomorrow, but I just wanted to add it here as a summary because the whole topic is on human resource compliance, is that there are or have been additional deductions and changes in terms of social insurance. And ultimately, the toughest, which I highlighted yesterday, the toughest aspect to think about is really in relation to work permits. So let's touch on a little bit about the coronavirus. Now, I have listed here all of the tax policies that have come about under the coronavirus. The first one I want to highlight is that tax returns for February have been postponed to February 28th. So on Friday is the deadline. That's for value-added tax as well as individual income tax. This is just an extension because not everybody is back in the office, not everybody is connected to their servers and software systems, and keep in mind the tax bureau is also not all back yet. So they've extended it in order to just give enough sufficient time for people to handle all of this during this period. There is also a deferral payment with a maximum of 3 months for companies that have been severely affected by the outbreak. Now, obviously, the biggest question is how do you define severely or greatly affected by the outbreak? If you have most of your team back, then that's not what they consider severely or greatly affected. If you are still to this day completely shut down, well, that is severely and greatly affected, and you can do a deferral payment. If you are in that category, please talk to your tax officer, or have your appointed person talk to your tax officer to know exactly what's going to apply to you. Now, what I find is really great about I don't want to say really great about the coronavirus, that's not what I intended to say, but what has been a positive effect of the coronavirus is that it has made individuals or companies be much more transparent with their tax officers about their current situation. Now, generally speaking, most companies are always hesitant about communicating with their tax officers. They never want to reveal too much information. They never want to really discuss what they're doing in terms of transactions, etc. I always think this is a tremendously big mistake. You should have open dialogue with your tax officer. And currently, during the coronavirus, even more so, right? If you don't have that open communication and dialogue, you won't get any of these benefits or these policies. So keep that in mind. Now, the majority of these policies that have been implemented are really surrounding medical personnel, medical institutions, medical factories, anyone that is helping to assist with the epidemic. It's also geared towards people that are making donations, companies and individuals that are making donations. So you'll see that in the next couple of slides. So basically, medical personnel, prevention workers, they are also getting exemptions for any bonuses and allowances they're receiving in respect to the activities that they're performing right now. Supply of medicines, medical protective equipment, again, that are provided to employees are all exempted from individual income tax. Qualified enterprises operating in the production of key materials will get a full refund of the VAT. Enterprises that are providing transportation services for key materials during the outbreak, again, exemption from VAT. Enterprises providing certain essential living services and materials during the outbreak, again, will be exempted from VAT and additional surcharges. Enterprises purchasing equipment to expand the production of key materials for the epidemic, again, will get one-time deductions off of the equipment. Health authorities importing materials during the epidemic will be exempt from customs duties. Donations from enterprises and individuals to public welfare organizations can be utilized as deductions for taxable income, and this is applicable for next year, right? Because it's not applicable to 2019 calendar year, it'll be applicable for the 2020 calendar year. Donations from enterprises and individuals to hospitals will also be deductible in their income tax for next year. Free donations from working units, individuals, commercial households, all for the epidemic will also be exempt from VAT, consumption tax, and additional surcharges. Donations related to imported key materials, again, exemption from customs duty, value-added tax, and consumption tax. And this is for the period between Jan 1 and March 31st. However, who knows if that time frame will also be extended. Additional tax policies, enterprises operating in certain industries that are affected by the virus can carry forward the loss incurred in 2020 for up to 8 years instead of 5 years. Enterprises subject to real estate tax, urban land use tax can apply for reduction exemption of taxes as well. And local tax bureaus are trying to do their best to support local companies and enterprises. So depending on where your company is actually established in China, you may also want to reach out to the local tax bureaus to see what benefits you might get from them. So that is all the tax policies so far that have been published under the coronavirus. I am pretty sure there will be additional ones that come out as well. Here are 8 ways I can work with you to understand and initiate your individual income tax obligations. We offer employment advisory, we draft employment agreements and handbooks. We can do employee and company due diligences. We offer an incubation service, which is a service where we can act as an intermediary to hire individuals if the company is not ready to commit to an entity in China. We can do work permit and residence visa applications, individual income tax calculations, payroll services, including income tax calculations and payments. We can also apply for housing fund and social insurance applications for new companies that have been established in China as well. Now, I hope that all of this information was useful to you. If you would like to book a strategy session and speak about your individual case or your company's case, then don't hesitate to reach out. I'm just going to add the URL where you can actually set up an appointment directly in my diary if you want to talk about anything. There are a lot of people right now based in China who are a bit lonely because they have cabin fever. So if you just want to have a chat, let me know. It's always nice to kind of bounce ideas off of everyone. I just wanted to touch a little bit on the China roadmap, which is something I've created primarily to help companies that are or individuals that are startups or trying to get China ready. This is a roadmap I've created, which is supposed to give people a sort of bullet point checklist of what they need to do to analyze the market, implement correctly, and then grow. So, the first milestone in the program is understanding the opportunity that has either been offered to you or that you have found out. And that really comes through education, research, and building up a strategy for the market. Implementation is all about understanding how to transact properly with China. That can just be through trade transactions, service transactions, or actually an implementation of an actual entity in China. And it's all about building your network, making sure you have protection devices that protect your brand, your company, you as an entrepreneur, and that you also develop then operational guidelines, so system processes, that if you do have any staff turnover, anybody who joins in knows exactly how they should be operating in China. All of this leads on to growth, and that's probably what everyone's goal is in China, is to grow, right? You want to make sure that you have numbers, that you can read them, that you can analyze them, so that obviously at some point decisions can be made and you are able to focus on the direction that you want to take with your company. And I think probably the biggest issue is that you have the ability to make decisions. All of these steps are about making sure that your business or whatever type of business you are doing in China is safe, protected, and efficient, and ultimately leads you to a growth strategy. So it's now time for the Q&A. I have no questions that have popped in. If you do have any questions, there's still a couple of minutes that you can write them into the questions section of the control panel. All right, so there's a question that came into the chat from Sherry. May I ask whether expats enjoy both special deductions and traditional tax exemptions at the same time? I don't know what you mean by traditional tax exemptions, Sherry, but foreigners do enjoy the special deductions, and they do enjoy just generally any form of tax deduction. But it has to be related to China. So, if they are offering elderly support to parents that are in Europe, that won't be utilized as a deduction for China. It's about, offering elderly support to elderly people that are in China. So you've got to really look at those definitions of the deduction items. Housing is only for housing in China. If they have a second house in Europe, that does not count as a deduction. So it's about what they have in China that can be utilized as a deduction for their income tax. I hope I was able to answer your question on that. If you're talking about the traditional tax exemptions, I assume you're talking about the 5,000 RMB plus the deductions. This is all applicable to foreigners as well. Sherry, if I didn't answer your question properly, let me know, and then I can come back to you at a later stage. If anybody else has questions, again, we'll use the next couple of seconds to wait for them. No? Nobody has questions? All right, let's move on. Otherwise, don't forget, you can book a strategy session with me and I can answer all the questions that you might have. So definitely go ahead and book a time slot. Otherwise, we have our last session tomorrow where I will be focusing on social insurance obligations in China, and I will be also defining to you what those social insurance obligations are. A lot of people misunderstand what social insurance means in China, how it should be calculated, who it applies to, who can be exempt from it, and we'll be touching on that in tomorrow's session. So if you haven't registered and it's something that's interesting for you, then you can go to our website at woodburnglobal.com/events, and you can set up a, or you can register directly from our website. So I want to thank everyone for joining me today. I hope that the session was useful to you. If you do have any other questions, again, don't hesitate to reach out, and I hope to see you all again in tomorrow's session. I'd like to thank you and wish you a very pleasant evening. Goodbye.